Okay, let's set the stage. Imagine building a massive edtech empire, becoming one of India's most valued startups, and then suddenly finding yourself in deep waters, potentially facing a merger or even a sale. That's the situation Unacademy is currently dealing with. A few years ago, they were riding the wave of online education, raising millions and expanding like crazy. But now, the waters are much murkier. So, how did Unacademy, once the poster child of Indian edtech, find itself at this crossroads? Stick around as we dive into the truth behind Unacademy's rise, its struggles, and what lies ahead. Welcome to the AI Lib. Unacademy didn't start as the massive edtech platform it is today. In fact, its origin was much more modest. Back in 2010, Gaurav Munjal was a software engineer with a knack for teaching. In his spare time, he began uploading simple programming tutorials on a YouTube channel called Unacademy. For 4 years, that was it. A small, passionate project that Gaurav managed on the side while working his full-time job. The channel attracted a niche audience, mainly consisting of students and tech enthusiasts eager to learn programming skills. However, Gaurav knew there was something bigger out there, especially in a country like India, where education is such a prized asset. The real turning point came when Gaurav met Roman Sani in 2015. Roman wasn't just another educator, he was something of a prodigy, having cracked both the AIMS, medical, and UPSC, civil services, exams, two of the toughest exams in India. Roman's expertise in exam preparation, combined with Gaurav's tech background, sparked the idea of expanding Unacademy into something far more impactful. This partnership led to the rebirth of Unacademy in 2015, transforming it from a small YouTube channel into a fully fledged educational platform. The focus now was on competitive exam preparation, a huge market in India where students spend years and significant amounts of money preparing for exams like the UPSC, JEE, and NET. Unacademy wanted to tap into that market by providing high-quality, accessible online resources. It wasn't just about helping a few students anymore. Gaurav and Roman had a vision of creating an edtech platform that could scale, reaching millions of students across India. And they didn't want to just offer classes. They wanted to change how education was delivered in the digital age. With this vision, they set out on the journey to build what would become one of India's largest edtech startups. Once Unacademy relaunched in 2015 as a competitive exam preparation platform, Gaurav and Roman quickly realized that they couldn't rely on organic growth alone. They needed a strategy to scale, and fast. But scaling in the education sector is tricky. It's not like a streaming service or a ride-hailing app, where customer retention is relatively high. Education is different. Students use a platform to prepare for exams, and once they're done, they have little reason to return. This low retention rate meant that Unacademy had to think differently if they wanted to grow. Taking inspiration from the tech world, Gaurav and his team adopted a strategy similar to consumer tech giants like Uber and Netflix. These companies became famous for spending massive amounts of money upfront to acquire users, betting that once customers were hooked, the business would eventually become profitable. The idea was simple: spend big to get as many students on board as possible and worry about profitability later. Unacademy began raising significant capital to fund this ambitious growth plan. They were burning cash, spending heavily on marketing, and offering free or discounted courses to attract students. Their goal was to build brand recognition and capture market share quickly, with the hope that once students experienced the platform, they'd come back for more. The aggressive approach worked, at least at first. By 2020, Unacademy had raised hundreds of millions of dollars from prominent investors and had expanded its offerings beyond competitive exam prep to include professional courses, skill development programs, and even K-12 education. They acquired smaller edtech companies to build out their ecosystem, covering as many educational needs as possible. But there was a critical flaw in this plan. Unlike Uber or Netflix, where users are likely to become long-term customers, Unacademy's model didn't offer the same stickiness. Students would join the platform to prepare for an exam, and once that exam was over, they'd leave. There was no ongoing subscription model or incentive to keep them engaged for long periods. This low retention rate meant that Unacademy's customer acquisition costs were extremely high, and the returns weren't as quick or as consistent as they had hoped. Still, the company pressed on, confident that the long-term vision would pay off. But behind the scenes, cracks were beginning to show. Between 2020 and 2022, Unacademy hit its peak. This was a time of unprecedented growth in the edtech sector, driven by the increasing demand for online education. With students unable to attend traditional classrooms, online platforms like Unacademy became the go-to solution for millions of learners across India. The edtech industry, once a niche, suddenly found itself at the center of attention, and Unacademy was one of its brightest stars. During this period, Unacademy raised over $640 million in funding, fueling its aggressive expansion. The company wasn't just content with being a test prep platform anymore. Gaurav Munjal had a much bigger vision. He wanted Unacademy to become a full-fledged edtech ecosystem, offering courses for all types of learners, from school students to working professionals. To achieve this, Unacademy began acquiring smaller edtech startups that specialized in different educational verticals. They entered the K-12 market, launched new professional certification courses, and even dabbled in skill development programs. At the time, this strategy seemed like a no-brainer. The demand for online education was skyrocketing, and investors were eager to pour money into edtech startups. Everyone believed that this growth was just the beginning, that online education was the future, and the numbers would only continue to rise. It was a bubble, but no one saw it that way. However, the surge in demand wasn't as permanent as Unacademy had hoped. The massive growth during this period was driven by external factors, and once those factors subsided, so did the demand. As schools and offline learning centers began to reopen, students slowly started to return to traditional learning methods. The inflated demand for online education that Unacademy had relied on was beginning to wane. This marked the beginning of Unacademy's struggles. They had expanded too quickly, acquiring companies and entering new markets based on the assumption that online education was the future. But as demand decreased, the company found itself in a difficult position. They had spent enormous amounts of money on expansion, but the returns weren't coming in fast enough to justify the costs. The bubble had burst, and Unacademy was left scrambling to adjust. By 2021, cracks in Unacademy's financial model started to show. While the edtech giant had succeeded in raising substantial funds and acquiring millions of students, the balance sheet told a different story. Between FY21 and FY22, Unacademy generated a total revenue of 1,117 Indian rupees crore, a solid number on the surface. But when compared to the company's expenses during the same period, the reality was much more sobering. Unacademy's operating costs amounted to 5,733 Indian rupees crore, resulting in a massive burn rate of 4,600 Indian rupees crore in just 2 years. This wasn't just a mild miscalculation, it was a financial red flag. Unacademy had been spending aggressively on marketing, customer acquisition, and multiple acquisitions in the hopes that the revenue would catch up. But education, as mentioned earlier, doesn't offer the same high customer retention that other tech services might. Most students come to Unacademy for a short-term purpose, exam preparation. Once their exam is over, many students leave the platform, having no further use for it. This transient user base proved to be a major obstacle in achieving long-term profitability. Gaurav Munjal and his team had assumed that once students experienced the value of the platform, they would become loyal, paying customers. But education doesn't work that way. After passing their exams, students no longer needed the service, and the platform struggled to keep them engaged. Unacademy's rapid growth in users didn't translate into the consistent revenue stream they had hoped for. As the financial strain worsened, the flaws in Unacademy's strategy became more evident. The company's reliance on venture capital to sustain its operations was unsustainable in the long term. While they had successfully raised over $640 million between 2020 and 2022, this influx of capital was being spent faster than it was being replenished. The edtech bubble, once buoyed by a surge in demand for online learning, was beginning to deflate. And as the demand dropped, so did investor confidence. For Unacademy, the issue wasn't just about making money, it was about survival. The company's burn rate was becoming unmanageable, and Gaurav Munjal was faced with a harsh reality. If they didn't cut costs and find a path to profitability, Unacademy might not be able to sustain itself. It was a wake-up call that forced the leadership team to rethink their approach. The days of rapid expansion and unchecked spending were over. The first step in addressing this financial crisis was to reassess where the money was going. A significant portion of the company's spending had gone into acquiring users, under the assumption that they would convert into paying customers over time. But as we've discussed, the low retention rate made this strategy ineffective. Unacademy needed to change course, and fast. The company had no choice but to cut costs, scale back on its ambitions, and focus on stabilizing the business before it was too late. Faced with mounting financial pressure, Gaurav Munjal knew that Unacademy couldn't continue operating in the same way. One of the first and most difficult decisions was to significantly downsize the company. In early 2022, Unacademy began laying off a substantial portion of its workforce. Over 50% of the company's employees were let go, with the headcount dropping from 6,000 employees to fewer than 3,000. This decision wasn't just a cost-cutting measure, it was a survival tactic. The layoffs primarily targeted non-core divisions, including projects that didn't align directly with Unacademy's primary mission of exam preparation. During the boom years, Unacademy had expanded into various verticals like K-12 education and skill development. However, many of these expansions were burning through cash without generating enough revenue to justify the expenses. By trimming these verticals, Gaurav hoped to stabilize the company's finances. The layoffs were a hard pill to swallow for Unacademy, a company that had prided itself on rapid growth and innovation. But in many ways, it was a necessary step to refocus the business. Gaurav Munjal, in a public letter to his team, acknowledged the gravity of the situation. He admitted that the company had overhired during its peak growth phase, and that now, difficult choices had to be made for the company's long-term viability. The retrenchment didn't just stop at layoffs, though. Unacademy also scaled back on some of its ambitious projects and acquisitions that had been launched during its growth spree. Many of these projects were either sold off or shut down entirely, allowing Unacademy to conserve cash and concentrate its efforts on its core business, test preparation. At the same time, Gaurav and his team realized they couldn't simply rely on cutting costs to turn things around. They needed to find new ways to drive growth, but this time with a more sustainable approach. The days of burning through cash in hopes of future returns were over. Now, the focus had shifted to building a business model that could generate steady revenue without relying on constant infusions of venture capital. However, the layoffs weren't without consequences. Employee morale took a hit, and the company's public image suffered as news of the downsizing spread. For a company that had been a poster child of India's booming startup ecosystem, this was a humbling moment. But in many ways, it was also a reality check. Unacademy had grown too quickly, and now it was time to pay the price for that rapid expansion. Despite the challenges, Gaurav remained optimistic. He believed that with the right focus and strategy, Unacademy could emerge from this difficult period stronger and more resilient. The key was to adapt to the changing landscape of the edtech industry and find new ways to engage students without burning through cash at the same rate. And with that in mind, Unacademy began to explore a new frontier, offline learning. As the demand for online education began to wane, Gaurav Munjal and his team realized that Unacademy couldn't rely solely on its digital platform to sustain growth. The online education space, which had once seemed like the future of learning, was proving to have limitations. Retention was low, competition was fierce, and the costs of acquiring new users were too high to maintain in the long term. Unacademy needed to diversify its offerings, and one of the most significant pivots they made was moving into offline education. In May 2022, Unacademy opened its first offline learning center, marking a significant departure from its digital-first roots. The move into physical learning spaces wasn't just a reaction to declining online demand. It was part of a broader strategy to integrate both online and offline education. Gaurav believed that by offering students the best of both worlds, online resources combined with in-person coaching, Unacademy could attract a wider audience and create a more sustainable business model. The decision to open offline centers was also driven by a simple truth. Many students and parents still preferred the traditional classroom setting for exam preparation. While online learning had its advantages, face-to-face interaction with teachers and peers remained an invaluable component of the education experience for many. This was especially true in India, where established offline coaching centers like Alan and Akash had been successfully helping students prepare for competitive exams for decades. By the end of 2022, Unacademy had opened more than 60 offline centers across 40 cities in India. These centers were strategically located in areas where demand for exam preparation was high, allowing Unacademy to tap into a market that had previously been dominated by its offline competitors. The centers offered in-person classes, mentoring, and access to Unacademy's extensive digital resources, creating a hybrid model that combined the strengths of both online and offline learning. However, the shift to offline learning wasn't without challenges. Running physical centers came with significant logistical costs. Rent, staffing, infrastructure, and utilities all added up. Unlike the digital platform, which could scale relatively easily with low overhead, the offline centers required substantial upfront investment and ongoing operational expenses. And while Unacademy had successfully raised funds in the past, the company was now under pressure to show more immediate results. Additionally, Unacademy was entering a highly competitive space. Players like Alan and Akash had built their reputations over decades, and their track record of delivering results made them the go-to choice for many parents. Competing with these established brands wasn't going to be easy, especially for a company that was still relatively new to the offline education market. Despite these challenges, Gaurav remained confident that the hybrid model was the way forward. He believed that the future of education lay in combining the accessibility of online learning with the effectiveness of offline coaching. By offering students the flexibility to learn online while also providing the support of in-person instruction, Unacademy could differentiate itself from both purely online and purely offline competitors. But the move to offline learning wasn't just about meeting market demand. It was also about creating a more stable revenue stream. Unlike the transient nature of online learning, where students often leave after a few months, offline centers tend to have higher retention rates. Students enrolled in these programs were more likely to stay for the full duration of their exam preparation, providing Unacademy with a more predictable source of income. With the pivot to offline learning underway, Unacademy was entering a new phase in its journey. The company was no longer just an edtech startup. It was evolving into a hybrid education platform, one that aimed to combine the best of both worlds to serve students better. But as they navigated this transition, new challenges and opportunities lay ahead. Expanding into offline education wasn't just a pivot for Unacademy. It was a calculated risk. The offline education market, especially in India, was already crowded with established players like Alan Career Institute and Akash Institute. These companies had been around for decades, building not only strong reputations but also trust with both students and their parents. When it comes to high-stakes competitive exams like JEE, engineering, and NET, medical, reputation matters, and Alan and Akash had decades of successful results backing them. Competing with these giants wasn't going to be easy for Unacademy, which, despite its strong presence online, was a newcomer to the physical education space. One of the first challenges Unacademy faced was differentiating itself from these established players. Alan and Akash had built their success on a tried-and-true formula of in-person coaching, rigorous academic schedules, and a network of highly experienced teachers. For years, they had refined their methods, and their results spoke for themselves. Students from Alan and Akash routinely topped national exams, making these institutions the gold standard for exam preparation. This created a significant barrier to entry for Unacademy, which now had to prove that its hybrid model of combining online resources with offline centers could offer something better, or at least as good. The other challenge was logistical. Running offline centers comes with its own set of complications that Unacademy hadn't dealt with as an online-first company. Unlike its digital platform, which could scale easily without significant infrastructure costs, offline centers required physical spaces, equipment, and staff. Rent, utilities, and maintenance all added up. Then, there was the challenge of finding and retaining qualified teachers. In the world of offline coaching, a strong teaching faculty is one of the most critical components of success, and top-tier teachers were already in high demand at established institutions. Convincing these educators to join a relatively new player like Unacademy posed its own set of challenges. But beyond operational hurdles, the real test for Unacademy was winning over the trust of parents. In India, parents play a significant role in the education decisions of their children, especially when it comes to high-pressure exams like JEE and NET. These parents were accustomed to the traditional classroom setting, where they could see the tangible benefits of face-to-face instruction and personal interaction with teachers. For many, online learning was still seen as a secondary option, something less reliable than the time-tested methods of in-person coaching. Unacademy needed to convince these parents that their hybrid model wasn't just an experiment, but a viable, competitive option that could yield the same, if not better, results. Unacademy's hybrid approach, offering both online flexibility and the structure of offline centers, was designed to address some of these concerns. The company emphasized that students could benefit from the best of both worlds: personalized online study plans with access to high-quality teaching in a classroom setting. They also touted their use of technology to enhance learning, offering data-driven insights into student performance that could be used to tailor instruction to individual needs. But while the pitch sounded promising, it would take time to prove its effectiveness in the competitive and demanding exam prep environment. The offline expansion also brought with it a new kind of financial pressure. Running offline centers is expensive, and unlike an online platform, which can serve millions of students with relatively low incremental costs, physical centers are limited by geography and capacity. Each center could only serve a finite number of students, meaning the cost of scaling was much higher. In this environment, Unacademy would need to strike a balance between growth and profitability, something it had struggled to do during its years of rapid online expansion. Despite these challenges, Gaurav Munjal and his team remained optimistic about the offline move. They believed that by integrating online and offline education, Unacademy could offer a unique value proposition that traditional players couldn't match. Their vision was to create a holistic educational ecosystem, one that could serve students at every stage of their learning journey, from online tutorials to classroom-based coaching. It was a bold bet, but it was one they believed was necessary for the company's long-term survival and growth. As Unacademy made its foray into offline education, the stakes couldn't have been higher. The company, which had once been celebrated as a darling of the edtech world, was now under intense pressure to deliver results, both in terms of student outcomes and financial performance. With the substantial funds raised from investors, Unacademy was expected to show not just growth but profitability, something that had eluded them during their years of rapid online expansion. The edtech landscape was changing, and Unacademy had no choice but to adapt. The early optimism surrounding the online education boom was beginning to fade, and investors were becoming more cautious. They wanted to see a return on their investments, and fast. The days when companies could burn through cash in the name of growth were coming to an end. For Unacademy, the pressure was on to prove that its hybrid model of online and offline education could generate consistent revenue without relying on constant infusions of venture capital. But profitability was easier said than done. The offline centers were expensive to operate, and while they provided a more stable revenue stream than the transient nature of online education, they still required significant upfront investments. The costs of maintaining physical locations, paying staff, and running in-person programs added up quickly. Unacademy needed to fill its classrooms and show that its hybrid model could attract enough students to cover the high operating costs. One of the strategies Unacademy employed to drive profitability was to focus on premium offerings. Instead of relying solely on mass-market exam preparation, they began offering more personalized, high-touch services. These included one-on-one mentoring, exclusive study materials, and small group classes, services that could be priced higher and offered more value to students. The goal was to create a tiered pricing model where students could access basic online resources for free or at a low cost, but would pay a premium for more personalized, intensive support. At the same time, Unacademy was also looking to leverage its online platform to support its offline expansion. The company's digital presence allowed it to reach students in remote areas who might not have access to physical coaching centers. By offering a blend of online content and in-person instruction, Unacademy hoped to serve students who needed flexibility, but still valued the structure of offline learning. The key to making this model work, however, was to ensure that the online and offline components complemented each other seamlessly. In addition to its hybrid strategy, Unacademy also began experimenting with new product lines to diversify its revenue streams. One of these was its foray into language learning, with the launch of a global product designed to compete with established players like Duolingo. This was a bold move, as it represented Unacademy's first real attempt to break out of the exam prep market and appeal to a broader, international audience. The success of this product would depend on whether Unacademy could translate its expertise in education into a completely different market, one that was less specialized but potentially more lucrative. Unacademy also explored the growing potential of artificial intelligence, AI, in education. The company launched Cohesive AI, a platform designed to help content creators generate written content more efficiently. With AI becoming a major trend in the tech world, Gaurav Munjal saw an opportunity to integrate these tools into Unacademy's educational offerings. By using AI to create personalized learning experiences, Unacademy hoped to differentiate itself from competitors and provide students with more tailored, adaptive education. But even as Unacademy experimented with new products and strategies, the core issue remained: how to make its business model profitable in a sustainable way. The company had been able to raise funds based on its potential, but now it needed to deliver on that promise. Investors were no longer satisfied with just growth. They wanted profitability, and they wanted it soon. This shift in focus from growth to profitability marked a new chapter in Unacademy's journey. The company was no longer the scrappy startup chasing user numbers at all costs. It was now a mature business that needed to navigate the complexities of scaling both online and offline, while keeping its financials in check. The road ahead was uncertain, but one thing was clear: Unacademy could no longer rely on the strategies that had worked during its initial boom years. It needed to innovate, adapt, and, above all, deliver results. So, what do you think? Will Unacademy's focus on AI and offline learning centers secure its future? Or is it still at risk of being overshadowed by competitors? Can it achieve profitability soon? Or will its past struggles continue to weigh it down? Let us know your thoughts in the comments. If you enjoyed this video, please give it a thumbs up, subscribe to the channel, and hit the bell icon so you don't miss any future updates. Check out the videos appearing on your screen right now for more insights and stories from the world of technology. This is the AI Lib. Stay tuned.